Welcome to Tech Talk here at MarketStream.live. I am Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we break down the markets, look at the charts, we take a look at the options pricing. That gives us some perspective on what's been happening in the past and also what's been being anticipated as potential movement in an underlying stock going forward. I want to take a look at some earnings stocks. Yes, we still have earnings that are out there, and there's some decent-sized earnings names that are going to be coming out after hours as well as tomorrow. Now, this session is not going to be done tomorrow. We're going to have a shortened day tomorrow. After the opening bell, we are going to be shutting down, getting ready for the Thanksgiving holiday. So with that being said, let's jump in. Let's start taking a look at some technicals. And the first group of stocks that I want to take a look at is going to be Hewlett-Packard Enterprise and Hewlett-Packard Inc. Now, these are two separate companies. HPE is the enterprise company, and HP is the PC and printer company. Let's start with HPE, Hewlett-Packard Enterprises, ticker symbol HPE. Stock is trading right around $22.79. It's down about 32 cents today. That's roughly down about 1.41%. Now, when you take a look at the moving averages, remember, yesterday we talked about it. We're going to look at the 20-day, the 50-day, and the 200-day. Those of you that have been watching Tech Talk, I've been using primarily the 50 and 200-day. I added the 20-day because I want to give a moving average that will give you more of a feel for trend for you traders. The 20-day is where if I see that the underlying is above or below that 20-day moving average, then I feel that that's the trend. So for example, in HPE, the 20-day moving average is coming in at 22.81. With the stock trading at 22.79, I'm basically seeing it butt up against that 20-day moving average. Now the stock has been moving up to the upside on the last few sessions, so it is in a bullish trend. If it can settle above that 22.81 and that 20-day moving average, we're seeing some momentum to the upside, especially going into this earnings announcement. Now the 50-day moving average, which is what I call that institutional support level, is at 22.47. That's below where the stock is currently trading at 22.79. Why do I call it institutional support level? Because once you see that the stock starts to break through that 50-day moving average, institutions start to get nervous. They might actually trim or think about getting out of a position if they're holding HPE in this case. The other factor that I like to look at is see if the 20-day is above the 50-day. And the wider that gets, the more prominent the trend is. It also is something where if, in fact, you start to see that the stock is well above that 20-day moving average, it may not be the best time to purchase that stock if you're bullish. Wait for it to pull down in between that 20 and 50-day moving average. That could be a primary because that's where institutions might look to reload and add some exposure, especially if their thesis is that they're still bullish. Again, that's why I'm pointing this out. Now, long term, looking at the 200-day moving average, comes in at 19.20. So that's where that long-term support is from a moving average perspective. What are the options telling us for the remainder of the week? Well, HPE has weekly options. And for those of you that don't trade options, that's okay. All we're using is the option pricing to figure out what the options marketplace is pricing in for potential movement between today and the earnings announcement until Friday. That's when these options that I was looking at to make this calculation are expiring. The options are pricing in the potential for the stock to move about $1.19, which is roughly around 1.4% going into the announcement of earnings. And remember, we have a shortened week. So basically, we have no trading on Thursday. It's going to get real light on Wednesday, and we have a half day Friday. So the bottom line is that they're pricing in the potential for the stock to go either up or down $1.19 into this announcement. Now, the implied volatility is on the lower third of the ranking. In other words, looking at the 52 weeks. It's on the lower end of its implied volatility over the last 52 weeks. Some of you might ask, what's implied volatility? That's just a calculation that's used in the option pricing model. It gives a forecast of potential movement in the underlying. So HPE right now, it's looking like it is in a bullish trend as far as looking at the moving averages, as far as the recent trend, especially in technology. We'll see how this enterprise services group does after hours, and the options are pricing the potential for it to move either up or down. It's not directionally biased by about $1.19. Now taking a look at HPQ, which was the split. This is the printer and the copier and computer arm of HP, and HPQ is trading at $15.93, down about 7 cents today, or roughly around 0.4%. Now, the 20-day moving average is coming in at 15.16. So you got the stock trading above the 20-day. The 50-day comes in at 14.98, stock trading above the 50-day, and you have the 20-day above the 50-day, and that gap is starting to widen there. In other words, the momentum is to the upside. And the 200-day comes in at 14.98. That's long-term support. So really, you're looking at a stock that has a confirmed trend to the upside, especially in the short term. And you see that right now, if you were going to buy this stock, you'd like to see it pull back between the $15 range and the $15.20 to $15 range. That's where you're going to start to see if there's going to be any huge momentous buying. But right now, the trend is to the upside. Now, taking a look at what the options are telling us, they do have weekly options in HPQ, and those expire on Friday. It's pricing in the potential for the stock to move into the event either up or down 77 cents. Volatility is relatively inexpensive, so there's not a heightened expectation of violent moves. That's what that means. Final name that I want to take a look at this reporting after hours tonight is GameStop, ticker symbol GME. GameStop is trading at right around $23.76, up about 30 cents or about 1.28%. Now the 20-day moving average is coming in at 22.70. Stock's at 23.76, well above the 20-day moving average. The trend, the bulls, they're in control. The 50-day moving average, though, comes in at 25.05. Here you have a situation where the 20-day moving average is below the 50-day. You're not having that conviction. You also see that the 50-day moving average is above where the stock is trading, so you don't have that institutional conviction right now, and probably explains why this stock has been under pressure as of late. The 200-day moving average is at 28.47, so you can see that there's a lot of work for this stock as far as getting any further institutional support that it has to do to the upside, but it is getting some momentum on the short-term trading side. In other words, that 20-day moving average, it is below where the stock is trading, so it shows that the current short-term trend is in the bull's favor at this juncture. The options right now, and there are monthly options on this, they're expiring in the third week of December on that Friday. They're pricing in the potential for the stock to move about $1.46, either up or down, going into the announcement. Now, implied volatility on those options is at the mid-level, around 50% in the rank side. So there's a heightened expectation of potential move. Not huge violence, but there could be some potential movement there. $1.46 being priced in. So you got basically a little, basically about a 2% potential move in there. So we're going to watch this one very closely. Tomorrow before the open, and we will be on tomorrow on the open. We're going to do the overnight action and then the opening bell. What's hot now on the opening bell? But we're going to have Deere. Deere Company, ticker symbol DE, is trading at 92.05, down about a quarter or 0.2%. The 20-day moving average is coming in at 89.76, so the stock's above that. It's above its 50-day moving average, which is at 86.77, and it's above its 200-day moving average. So you have trading and institutional support. Momentum is to the upside on Deere. They're pricing in the potential with the weekly options for the stock to move either up or down about $4.74 going into the announcement tomorrow morning. Should be interesting. A little bit of volatility in there. Not a ton. It's in mid-range, so not a heightened expectation of huge violent moves. But right now you have almost roughly about a almost 5% move that's being priced in going into earnings tomorrow morning. So that is it for Tech Talk. You have now got a better perspective on what's been going on with these stocks. We looked at the charts. You have some support and resistance levels by looking at the moving averages. and understanding where traders and institutions would be looking to potentially add or cut back on potentially their positions. And you see what the options marketplace is forecasting as potential movements in the underlying. So with that knowledge, you're armed, no longer dangerous. So with that, we want to take a look at the closing bell at 4:30 Eastern Time. Please join me today, and we will wrap up today's trading. Take care.